to the Real Estate Majlis podcast, where we bring you the latest insights and trends in the ever-changing world of real estate. Whether you're a seasoned investor, a first-time buyer, or simply interested in the world of property, our podcast is designed to provide you with valuable information and expert advice.
From discussing the latest market trends and investment strategies to exploring innovative technologies and design trends, myself, Dr. Mahmoud Al-Burai, and my co-host, Cecilia Rinaldo, will share our knowledge and expertise to help you make an informed decision in the real estate industry. So please sit back, relax, and join us as we explore the fascinating world of real estate on our podcast. This episode is powered by ThinkProp, the leading Abu Dhabi-based real estate training institute. Whether you're starting your career in real estate or looking to take it to the next level, ThinkProp offers a diverse range of courses certified by the Department of Municipalities and Transport, DMT of Abu Dhabi, with both in-person and online classes available at affordable prices. ThinkProp provides flexibility to fit your schedule. This institute is dedicated to developing a stronger real estate industry through knowledge and expertise. Visit ThinkProp website at thinkprop.ae to learn more.
In today's episode, we will discuss PropTech and different products available in the market. Our very special guest is Siddiq Farid, CEO of SmartCrowd. Siddiq pioneered setting up the region's first regulated digital micro real estate investment platform, SmartCrowd, registered in the DIFC and regulated by the DFSA. SmartCrowd was among the first in the region to graduate from regulatory sandbox and obtain full licensing in late 2019. Let's welcome Siddiq to the show. Welcome to the Real Estate Majlis podcast. Siddiq, the CEO of SmartCrowd. Thanks for joining us today.
Thanks for having me. I'm excited to be on.
Yeah, I'm excited because I love PropTech. So very interested to understand what your company is doing. So give us a brief what SmartCrowd does.
So SmartCrowd was derived out of a personal need. I wanted to invest in real estate and realized, I need to have a lot of my money tied up in one asset, or I need to get myself leverage or mortgage to buy investment. And that, as a financial professional, that didn't make sense to me in terms of most efficient way of allocating capital. That's where the idea came of fractionalizing the asset class so more people can access it, because everybody wants to invest in real estate, but they struggle to do so because it requires a lot of capital. So we created a digital platform that allows people to make micro investments into real estate. For as little as 500 dirhams, you can own a piece of a property and then benefit from any returns that are generated from that property. Okay. So you allow crowd collectively to own assets. Hence, we call ourselves SmartCrowd. We want people to be part of that smart investor community to make smarter decisions. So we solve three key problems of investing in real estate. The first problem is people need to have a lot of capital. Second, they don't know how to source properties. And third, they don't know how to evaluate investment opportunities. So we solve all those three problems by fractionalizing the asset class, making the minimum investment only 500 dirhams. We give access. Second, we give them access to pre-vetted investment opportunities that are already gone through our due diligence process. And third, we provide them all the data, etc., to allow people, empower them to make effective investment decisions. So we educate them as well, not only give them investments, so they can make better investment decisions as well too, in a very convenient manner from the convenience of your device. You can invest in real estate.
So it is a fractional ownership model?
Pretty much, yes. So we allow people to own small pieces of mainly buy-to-let rental properties is a big focus, to focus on generating returns, whether it's income or capital appreciation.
But how does it work in terms of the structure of the company? Do people buy into your company, or you have to set up a special entity for each property that you buy? How does that work?
It's a very good question. So the way we structure these things to enable that, because right now you cannot have hundreds of people on the title deed. So what we do is we create a special purpose vehicle, an SPV. It's a DIFC company. DIFC is the Dubai International Financial Center. It's one of the top 10 financial centers in the world, where we set up an SPV. The SPV owns the title, and then all the investors are shareholders in the SPV. So we create an SPV for single assets. What's good about that is it completely ring fence every investment separately. So you don't have an exposure to another asset, etc. It provides you full protection and has no exposure to SmartCrowd as well too. So if SmartCrowd for whatever reason is not operating tomorrow, your investment does not get impacted. It's completely ring fenced, independent entity itself. So your investment doesn't get any impact. SmartCrowd does not have any ownership. We only have administration rights to manage that SPV on behalf of the investors.
So just to break it down, because it's so interesting. So the company will buy the asset, and then the rental of the asset will be paid into that company bank account.
Yeah.
And who manages that logistic?
So we're financially regulated. I should probably mention that as well too. So SmartCrowd is DIFC registered, regulated by the DFSA, which is the Dubai Financial Service Authority. We were the first ones in the entire region to make this a possibility, because when we first started, there was no legal framework and there was no regulatory framework to make this possible.
Especially on fractional ownership,
Yeah, so fractional ownership, the whole ideas are still very nascent, but there was no legal framework, these SPVs, and there was no regulatory framework to regulate this activity. So we took a leap of faith, thinking that we're going to create a lot of value and stakeholders will see that. And we were right. There's a lot of support from DIFC, DFSA, as well as the Dubai Land Department has been very accommodative in terms of making this a reality. So to answer your question, so we're regulated. Everything is held in a custodian account, a client money account. Again, that's not an account that belongs to SmartCrowd. It's a third-party account. The bank issues a letter to the regulator that this money belongs to the client of SmartCrowd, not SmartCrowd itself. So all the money gets pooled in the client money account. On our SmartCrowd platform, you have a digital wallet. So that's where all your investment returns go into. You can accumulate there to reinvest that money, or you can withdraw that money at any point in time you like. We pay out dividends or rental income every 12th of the month. So every 12th of the month, there's money in your wallet.
So you actually get paid monthly out of this scheme.
Correct.
That's good.
Yeah. So depending on how much you invest, etc., we've done over 120 properties on our platform, over 100 million dirhams. We've paid out almost, this month we'll cross around 6.5 million in rental income to our investors. We've done 7 exits and returned capital to our investors that have exited. About 80% of them have reinvested that money back onto the platform because they just love it. It's so convenient for them that they're generating income every month and reinvesting that on a regular basis and compounding that's how the wealthy get wealthy. They just compound their money, make their money work for them.
Well, I always think, if you want to get rich, real estate's the way. A bit controversial because people will say, there are different asset classes. You shouldn't put all your eggs in the same basket, but I'll go real estate all the way.
100%. No, I agree with that, right? So I'm a financial professional. Allocating capital, risk management is in my DNA. And the whole reason for finding SmartCrowd is to give people the ability to build diversified portfolios. We never preach to people, say, put all your money on SmartCrowd. You should never. It should always be part of your wider portfolio. You should have some allocation depending on your personal profile, some allocation to public equities, some fixed income, and real estate. The problem is many people don't have the ability to build that diversification because the wealthy are able to do that. You need to have millions of dollars to buy some real estate and still have money to make investments in shares, public equities, etc. Whereas an average person, if they buy real estate, it pretty much becomes 80-90% of their entire wealth is tied up in one single asset. True. And that's not smart, right? Because God forbid you make a wrong decision, you buy in the wrong area, you buy the wrong building. Your investment, your entire wealth is exposed to one single asset. There's a saying, don't put all your eggs in one basket. Yeah. And what SmartCrowd allows people to do is, is to build a diversified portfolio, and within the real estate space, build further diversification. Great, you have money to buy one property. That's fantastic. But why put 1 million dirham in one asset when you can take 1 million dirham and get exposure to 10 different assets? Some in Marina, some in downtown, some in, GLT, etc. So you get diversified because Dubai is very diverse. Different areas perform differently. You have different strategies, affordable, long-term, short-term rentals, prime real estate, etc., and so forth. So why get exposure to one type of asset where you can diversify and build a basket of assets and generate good risk-adjusted returns from that investment?
Mahmoud,
you're convinced? Getting
there. Let's see by the end of this podcast.
Yeah. I mean, the whole idea actually, Sadiq, of bringing you to the podcast is that we have a lot of investors who are reluctant to buy like a 1 million dirhams asset, and they want to try real estate with a smaller portion.
Correct.
So SmartCrowd and other platforms are giving them this. So a question maybe a little bit related to the risk return kind of comparison. Real estate investment trust and crowdfunding.
Yes.
How do you compare and contrast them? Which one has higher or lower risk, equity, return from your perspective?
Yeah, so it's a good question, right? So we consider ourselves very different from a real estate investment trust for a couple of reasons, right? So real estate investment trust is for people that don't know, it's typically a publicly traded fund that has a basket of real estate exposure to it. Mainly, in Dubai, there's two publicly traded funds, Emirates MBD REIT and Emirates REIT. They typically have a basket of commercial, residential real estate, but there you are giving money to a fund manager. So you don't have discretion in terms of where your money is being invested and how the money is being invested. You're giving money to a fund. The fund manager makes a decision. A lot of that is also a lot of financial engineering, where there's a lot of leverage involved in that and so forth. Real estate investment trusts became very popular, in the 80s and 90s. And they do really well in developed markets where you have sophisticated tax structures and so forth, because there's a lot of tax benefits of leveraging the assets, doing a lot of depreciation, tax write-offs, etc., and so forth. And a lot of financial engineering play goes into that. In Dubai, we don't have corporate tax and so forth. So, the REITs don't necessarily provide that much of a benefit. Plus, if anything happens to the stock market, the correlation to REITs versus stock market is relatively similar. So if the stock market goes down, the REITs might also get hurt, etc. Whereas what we offer direct access to properties, right? So it's like private properties. So the stock market can go up and down, but this is completely separate. So it gives you further diversification. The correlation between private real estate versus publicly traded funds is to public equities is very different. So if you look at even the wealthy, the wealthy will have some allocation to real estate in a publicly traded real estate fund because for liquidity reasons, but they will have a lot of allocation to private real estate that is not liquid. And there's a reason for it's not liquid, because it provides you further diversification in your overall portfolio. REITs typically will be they are more liquid in theory than private real estate. So, but liquidity comes at a cost. So if you look at the comparison of performance of the two REITs in Dubai, they haven't done quite well compared to what the market has done overall in terms of the Dubai real estate market. And the reason for that is because you're not only getting exposure to real estate, you're getting exposure to interest rate risk, operational risk of the fund manager, the fund costs, etc., and so forth. So the risk reward hasn't been there for REITs. And this is one of the reasons we thought we believe SmartCrowd offers a better alternative than the publicly traded REITs, at least for this market.
Great. On the exit, I mean, you mentioned...
I was about to ask that question because...
Same question, right?
Yeah, I mean, getting to...
Is key. Yeah, people
listen, I get calls every day about, I want to buy here, but I said, guys, buying very easy. Go for it. Getting out is the question, right? So you're right, Mahmoud.
So the question on exit,
yes,
the liquidity is an issue, right? So how easy it is now to exit from a crowdfunding property?
Yeah, so listen, it starts off, like you said, it's easy to get on, right? But the beauty of working or using our platforms like ours is we do a lot of the homework. So one of the key criteria of us evaluating an opportunity to put onto the platform is the serviceability of that unit. And what I mean by serviceability is how easy is it to rent these properties? How easy is it to sell these properties when you need liquidity? Because you don't want to be buying something that there's not much demand for it, very difficult to rent or very difficult to sell when it's time to sell. So when you make those smart decision early on, it helps you down the line when you're looking for an exit. What we offer on our platform is two forms of exit. One is a collective exit. So we have a mandatory collective vote on a 5th year anniversary for all the investors to vote and decide whether they want to retain the asset or sell it. It's a mandatory vote on the 5th anniversary. That doesn't mean a vote cannot be called earlier or depending on the market conditions. So obviously the Dubai market has done really well over the last 24 months or so. And we've had lots of interesting opportunities where people have come to us seeking to buy some of the assets that we manage on behalf of the investors. And some of the offers were very, very lucrative, which we presented to the investors, and investors decided to exit and reallocate that capital. So like I said, we've done 7 exits, and we're looking at a few more assets to exit in the current market environment. And the other form of exit, so that exit is very possible. It's very easy
but
to
just on that, what's the percentage of voting should be able to exit? So
there's governance built into our platform. So we don't let anyone own more than 24.9% of an asset. So you need minimum 5 people to a property and minimum 3 people to make a decision. Okay. You need to have simple majority. So simple majority from an ownership perspective. Yeah. But 75% of the investor base has to vote. Right. That represent at least 51% or more of the shareholdings. Got it. To make a decision. So that also protects a minority investor. So we don't have 1 or 2 people making decisions on behalf of everyone. Yeah. We take that stuff very seriously. And these are not financially regulated rules. These are our inherent internal governance rules around that. And it works really well. So, people are happy. They've made some good returns. We've had really very healthy returns for those 7 exits that we have done. The other form of exit is we offer a share transfer facility, an exit window twice a year, every 6 months, where people can list their shares onto the platform for other people to buy shares. We do independent valuation. We do a market update, investment performance report for all the properties, put onto the platform, and the same information is available to both the buyers and the sellers, and they can list their shares at a price of their choosing. And if there's willing buyers on the other side, people can sell their shares. So we've already operated 2 transfer facilities. The first one was last August. We just concluded our second one in March. And it works really well. If you price them properly to market, some people are very opportunistic, looking to get a 10-15% premium. Obviously, even today, if you go into the market, try to sell your property for 15% premium, no one's going to buy that if you have unrealistic expectations. But if you price them to market, etc., you're bound to get more liquidity. And as the platform grows in popularity, more user base, more liquidity will come onto the platform.
And how do you make decisions in terms of what to buy? Obviously, in a market with so many different options, do you tend to focus on smaller units like studio 1 bedrooms, or you go for the high end or luxury branded? What is the criteria?
Yeah, so it depends on various different facets. So we're very much focused on return. Return is number 1 key. A lot of people talk about when they say real estate, say location. My mantra is cash flow.
I like that one. Right? I'm going to start to use this one now.
Because cash flow, from an investment perspective, cash flow, location obviously is important. You don't want to be buying stuff where the location doesn't make sense. But Dubai is a growing city, right? Location might change, or you have to have a very long-term view. But what's very important is you need to understand the demographics of the city. What is the demand-supply dynamics? And really focus on the ability for that asset to generate income. For our investors, income as well as capital appreciation. So our focus is very much on the return side. So that pretty much dictates in terms of our criteria that we look at. We're relatively active, I would say, in 7-8 areas in Dubai where we see a lot of demand. There's supply coming, but these are healthy supply because there's enough demand to absorb that supply. Supply coming in areas where there's not enough demand, that's where it becomes challenging. Supply is not necessarily a bad thing. 3-4 years ago, the headlines were supply-demand imbalances, but these are just headlines. You need to look at the data and understand what are the supply-demand dynamics. So that's part of our criteria in a big way. So historically, we've very much focused on studios, 1 beds, some 2 beds, but mainly because of a couple of reasons, like you asked earlier, right? They're easy to sell. There's a lot of investor demand, appetite for that. They're easier to rent. They generate good cash flow, good returns. Prime and luxury market has done extremely well over the last 24 months. This is something no one could have predicted. No. Right? I think, COVID and COVID was a blessing for the city, this country in general, but even the whole sort of this demographic shift and wealth coming over here, and it's come at a rapid pace. Luxury properties have done quite well, and but majority of those returns that people have made are purely from capital appreciation, right? So what we try to focus on is try to find that balance between income and capital appreciation, because if you make investment on the hopes that the price will continue to go up, etc. These are cycles. Depending on your timing, you might be like, prices didn't go up enough. But if there's element of income and capital appreciation, so even if you don't get crazy capital appreciation, you make money along the way. What I like to tell people is it's always good to get paid while you wait for the prices to go up.
Sure.
Right. So if you're getting paid, you can reinvest that money, right? And you might not get the 20, 30, 40, 50% capital appreciation in luxury market. But if you do the math in terms of regular income coming in and reinvesting that, you might get 5, 10% capital appreciation in the area. But if you're disciplined with your income and reinvesting that, you probably beat out luxury markets of 30, 40% return. But you have to be very disciplined in terms of your investment strategy.
And you put the units on an annual rent, or you would play on the short term?
So we're very data driven.
Okay.
So this is not like Sadiq feels we should do this. We're very data driven. So we look at the trends in the market. We have a portfolio of a lot of short-term rentals as well too, in specific areas. We have long-term rentals. We have furnished apartments.
So you diversify based on what's the possible. So it's not just linear. We put it
100%. And to give you some sense in terms of to really validate my comment around data-driven. We were very early on in holiday homes. We started doing holiday homes in 2018. Right, even during COVID, we had holiday homes, etc. And then short-term rental became really, really popular post-COVID, where everybody wanted to do holiday homes. Vacant properties started having a massive premium, etc. So we were very early on in that process because we saw a trend. Same thing, if you remember, from late 2018, 2019, rents had come down quite a bit. Significantly. So at that point, we were actually buying properties that had longer tenures because we saw rents coming down, so we can maintain a higher yield for longer. But also what we found is that obviously buying real estate is very difficult for many people, but if you look into Dubai market, renting is also very challenging for many.
True.
Right? Because you need to put, you got to pay 5% commission, you got to put a security deposit down, you got to put diva deposit, cooling deposit, you got to buy appliances, you got to pay at least 3 months of rent. So even to rent a small studio that's 30,000 dirhams, you need to have like 10, 12,000 dirhams of liquid cash to get into that. And a lot of people struggle to that. So we saw an opportunity, like, hold on, we can put diva deposit under our name, we can furnish the apartments, and we can do 12 months checks instead of all this. And all you got to do is pay commission, pay security deposit, and move in.
Yeah.
And what that allowed us to do was generate 30, 40% more return on the property because we can charge more rent for that flexibility. So we started doing that a lot earlier before people really caught on to that. So we have a lot of furnished apartments, etc., that are generating good 20, 30% more than what the market was doing. So we look at these trends and stay ahead of the curve. And now everybody was buying vacant properties. Vacant properties are very expensive, but the rents have really shot up. So we started buying stuff that is grossly under rented, because then per RERA index, I can increase rent. If it's there's brackets of how much away you are from the index, and then you have ability to raise maximum up to 20% rent. So we started looking at those grossly under rented properties, so we can buy them and then increase the rent. Either the person will take a 20% increase or will vacate, and then I'll have a vacant property. And then because it's grossly rented, I can get a better deal with the seller because, hey, you have a very low rented property. I'm not going to pay you full price. Our selection process is very data driven. It's not like what Sadiq feels like we should invest in. It's very much data driven, and we look at what's happening in the market in terms of trends, from demand perspective, supply perspective, because serviceability of the unit is very, very important for us. There's a very common saying when you look at real estate: location. We tend to focus on something called cash flow. Because
amazing, love that.
Right? Because for us, returns is very important. Like, location matters; it's a very key criteria for us. But we look at cash flow first before we look at location. Because if a property is able to generate returns, that money can be generated and reinvested to compound your investment over time. So you're not really 100% reliant on capital appreciation. You get income as well as capital appreciation.
Sure.
And if you are disciplined with your returns and reinvesting and compounding it, and when you get the capital appreciation, your returns are even more because of you getting both. You're not just focusing on capital appreciation. So we typically historically has focused on studios and one beds because that's where a lot of investor demand is. There's a lot of volume. It's easy to sell those assets. Are easy to rent as well too, and there's a lot of demand for that kind of clientele. Luxury market obviously has done quite well. Unexpectedly has really I could not have seen that coming. So it's an area that we were not heavily involved in, and these are very high end transactions that are typically for people that have a lot of money already buying these things on cash, etc. Not really a market focus for small investors that are looking for crowdfunding into real estate. But we look at a lot of data points. We're mainly active in 7-8 areas in Dubai where we see a lot of demand and supply activity. And we look at a lot of trends. So like, for example, we have some strategies where we look at short-term rentals, holiday homes. And we started doing that very early on before the market really got caught into it, right? Like it really picked up sort of post-COVID where everybody wanted to do short-term rentals. We were doing them as of 2018.
And it's great because you're not keeping the product linear, right? So you are giving people, you are obviously studying the property and the best possible outcome. And the other thing that as he talks, it comes to my mind is time, right? People don't have the time to micromanage. Even if you want to buy a studio, if you think about it, it takes a lot of time to find a tenant, rent, connect here, even though the digitalization process is great. But if you don't have the time, it's something that it provide a good option as well.
Yeah, for convenience, every 12th of the month, you get money in your wallet and you can choose what you want to do with that, with those returns. So it's very hassle-free. You don't have to deal with, I'll give you an example. The other day, we got an email from one of our tenants saying, hey, I want to cancel my lease because I think your place is haunted. I see.
Haunted?
So stuff like that happens, right? So some people make comments around that, how real that is, but you don't have to deal with those kind of situations because, we as a platform operator deal with all that headache and you don't have to worry about it. You get the check every month.
That's new, and I never heard that one here.
Please do not try this at home. It's an excuse that doesn't work.
Mahmoud, final question with you.
Final question. Within 30 seconds.
Yes.
If you have 1 million dirhams today, how much of that will go to crowdfunding platform as a percentage?
If you only have 1 million dirham as your investable capital, so it's hard to answer that question without knowing sort of further background. But let's assume you're a family person with a couple of kids, mid of your career, 1 million dirhams. In that situation, you're probably looking to preserve and accumulate capital. So I would say up to 40% should be allocated in real estate.
And how much of that will be in a physical real estate?
Everything, Mahmoud. Everything. Let's make his life easier. Everything.
Again, right? So depending on your career, I would say if 30 to 40%, that's about you're talking about 300 to 400,000 dirhams. I would put all of that on crowdfunding. Because that's not enough to buy one asset.
Or studio maybe.
You can get exposure to multiple assets because it's better than having only one asset.
I always say it's the last question, but then I come up with something else in the end. Just so people understand. So they go download your app. How does the process work so people understand?
It's very easy. So we have an app on Apple as well as
Android,
Play Store and Android. SmartCrowd AE is the app. You can download the app or also on our website, smartcrowd.ae. You have to create an account. We're financially regulated, just like you would open up a bank account. You have to satisfy the KYC AML requirements. Once your account is approved, then you have access to the marketplace where all the investment opportunities are available. And it's just simple. All the documentation is there. It's simple 5 clicks and you can become an investor. You connect your bank account and you can make instant payment as well too for that investment.
If the customer is not clear, would somebody from your company call them and give them some?
Yeah, absolutely. They can contact us at any point in time. There's a live chat on the platform as well too. You can reach out to us at info@smartcrowd.ae anytime as well too.
I invested myself.
You didn't tell me that.
I never made any call. I know that the money is there. I think I made above 6%.
So we need to do a follow-up podcast on how much money did Mahmoud make.
It's a hassle-free to tell you the truth. So
it's too hassle-free. Mahmoud only made one investment, but he wasn't very disciplined to continue investing. He would have made a lot more money during this period. But Mahmoud's been very supportive early on. He was one of our first 50 investors on the platform. So we're very appreciative of that. But people that are very consistent and regular have benefited tremendously from this upside in the market as well too. and they have built a nice portfolio that's generating good income that's being reinvested. So your money's working for you while you're asleep, which is perfect.
And this is it, right?
Yeah.
PropTech, it's there, and there are a lot of new companies, new businesses that could facilitate, help investors to make some money, getting out of the typical buying and selling process. So it's really welcome. It's amazing to know it's obviously fully regulated.
Just to wrap up, right? It's a good alternative to off-plan. A lot of people are priced out of the market because either they don't have enough money for a down payment or cannot buy a property outright. So a lot of people tend to go towards off-plan because they have a payment plan. Off-plan is not bad, but there's an element of risk, development risk, cycle risk, etc. Whereas
And the payment plans are getting more aggressive as well. They're asking a lot of money up front.
So, and you're buying something that you haven't seen, right? It's going to be constructed later on. So that's why you should probably do your homework in terms of what you're buying off-plan. But this is SmartCrowd becomes a good alternative for people to get started with small amount of money that is generating income instead of waiting 4 or 5 years for a handover and then start making money. So it works really well, and also it becomes very convenient for people outside of Dubai wanting to invest in Dubai. So we have about 40% of user base does not live in UAE. They're investors, they're foreign investors. We have people from as far as Auckland, New Zealand, never been to Dubai, investing in Dubai, because Dubai is a very attractive market. The world knows Dubai. And people want to invest over here. It's dollar denominated, generating good returns, tax free, and the platform becomes very accessible. And now, if you invest up to 2 million dirhams on the platform, you can also get golden visas as well too.
Yeah.
Oh, that's good to know.
New advance. Yeah.
Okay, Siddiq, it was great to have you at the podcast. I'm sure a lot of people will be contacting you after that.
Yeah.
You can reach out to me personally at Sadique@smartcrowd.ae, SIDDIQ, or info@smartcrowd.ae.
Great.
Thank you, Siddiq.
Thank you very much. Thanks for having me, guys. Thank you.
Bye. Thank you for tuning in to the Real Estate Majlis podcast. We hope you found this episode informative and insightful. If you have any questions or feedback, please feel free to reach out to us.